Since we're doing a video on banks, I figure I'd throw a little joke at you. Give a man a gun and he'll rob a bank. Give a man a bank and he'll rob everyone. Let's move on. What's up everybody, Steve here. I've been on a mad dash to liquidate a lot of assets. And the reason is I want to have a lot of liquidity to buy distressed assets in the future. Now I do want to preface this video that having your cash in the bank is not necessarily a good idea if you're just trying to save money. Rather, you need to have a plan on what you're gonna do with that money, because if it just sits there, inflation is just gonna eat away at it. And now being cash heavy, I needed to do some additional research on different banking institutions as well as credit unions to ensure the safety of my funds. Which is the reason for me sharing this video today. I'm going to read a paragraph on the Dodd Frank Act that was passed after the 2008 financial crisis. Thereafter, I'm gonna talk about strategies on what you can do with your funds as a response to the 2008 crisis under the Obama administration. Financial reform legislation named the Dodd Frank Wall Street Reform and Consumer Protection Act was passed in 2010. While the act is meant to protect businesses that stimulate the economy or are too big to fail, thanks to the loopholes in the verbiage, if you happen to hold your money in a savings or checking account at a bank and that bank collapses, it can legally freeze and confiscate your funds for purposes of maintaining its solvency. This is known as a bail-in, meaning that instead of relying on government funds or taxpayer money to save itself from going bankrupt, a bank can simply dip into your deposit accounts to stabilize itself. It will simply allow banks and financial institutions at risk of failing to take some of your deposits to bail themselves out. Look, you might be thinking right now, I'm good. We have FDIC insurance that insures me up to $250,000 per institution. Keep in mind that the FDIC total assets, which are in the billions, are dwarfed by the value of outstanding derivatives, which are in the trillions. Take JP Morgan and Bank of America as examples, as both have deposits totaling well over $1 trillion with outstanding derivatives whose total values exceed the entire global GDP. If they become insolvent and a disaster strikes, it would trigger orderly liquidation authority, essentially a bail-in. In a nutshell, this means that money you store in a bank becomes unsecured debt, with you becoming the unsecured creditor who must share the burden of these bank losses. So what am I doing? First off, I'm diversifying among multiple banks and multiple credit unions. For banks, right now I have Chase, Fifth Third, and PNC Bank. And now credit unions, I opened up 2 different credit unions. You have Suncoast as well as Lake Michigan. You actually have to be a Florida resident. Now let's compare notes on both banking institutions as well as credit unions. For one thing, banking institutions, they do have the FDIC insured program up to $250,000 per institution, which is wise to go ahead and spread your funds across multiple banking institutions. On the other hand, credit unions have what's called the NCUA, which is the National Credit Union Association, and again, that is insured up to $250,000 as well. Now keep in mind, banks are owned by investors, and those investors expect a return on investment. Unlike credit unions, where credit unions are actually owned by the members. At a bank, you're considered a customer. At a credit union, you're considered a member. Banks tend to have higher fees and really f you if you bounce a check or don't have sufficient funds in an account. Unlike credit unions, where they tend to work with you and have lower fees. Banks are more convenient because they have more ATMs as well as branch offices. However, credit unions traditionally have better customer service. They're non-for-profit, so they're not trying to gouge you for any mistake that you've made. Banking institutions usually require a certain amount of money that has to be in that bank account, unlike credit unions where sometimes it's no money. Banks usually accept any customer, unlike credit unions where actually membership, in most cases you have to go through an approval process, and a lot of times they do a hard pull on credit. And many times the fees and the interest on loans with a credit union are a lot lower than banking institutions. Okay, besides diversifying your funds across multiple banks and multiple credit unions, another thing you can do to protect yourself is ensure that you do have paper copies. I know that we're in this day and age where everything is online, but let's say something were to go and there was an outage and all of a sudden bank accounts got erased out of thin air. What do you really have to prove that you actually had these monies in an account. I know it might sound far-fetched, but I'd rather be safe than sorry. So you can have the banks or credit unions mail you hard copies. You can go ahead and print them off of your online statements every month, or maybe even go into a local branch. Another thing regarding both institutions, whether you're with a bank or a credit union or both, is I don't necessarily like funds just sitting in a savings account because you really don't make any money on that. Rather, I put most of the money into money market accounts. You get a little bit more than a savings account, and it still remains as liquid as if it were in a checking or a savings account. Another thing is I have a certain amount of cash in small bills just in case something were to happen. I have it stacked away in a fire safe, and I just want to make sure that I do have available funds if something does happen. So I don't know what the hell is going to happen with the future of 2022, 2023, but I do want to have a certain level of readiness to go ahead and strike if and when distressed assets hit the market. And I think the best thing that people can do right now is do your best to get out of consumer debt and start stacking some money for when that happens. As always, I appreciate every subscriber on this channel. If you're not subscribed, consider it, and I'll see you guys in the next video. Thanks a lot.